Good evening, everyone. Time for another silver update. Now, this is the weekly chart of silver provided by netdania.com. We're going to look at some indicators here. The first one at the top is the DMI, Directional Movement Index, and the one at the bottom is the ACD, the Accumulation Distribution Indicator. Some of this is kind of interesting here. More confirmation that we may have a bottom. Now, with the DMI, we don't have that much of a confirmation on this weekly here. You can see that this low of the red line here, that is an oversold condition. You can see that the highs here, 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 and here are marked by a spike in this red line. Now, we haven't had in the past a very oversold condition like we see right now. The only one that comes close, you can see right in here where the red line is significantly below the blue line, but nothing like we have here. And then, of course, if we pull out, and we're going to show you that next, to the monthly, then we'll see something that we've never seen before. Now, on the accumulation distribution, you can see that the bounce back on that is absolutely phenomenal, and we're going to see on gold it is even more dramatic. But before we do that, let's pull out to the monthly. And so I'm going to show you here that on this directional movement index, we've never been as oversold as we are. This goes back to the mid-1990s. And you can see that the red line is consistently above the blue line. The only time that the red line has gone below the blue line is right here just briefly, except for where we had right here, a very large crossover. So that is very significant. Put these two indicators together, that seems to indicate be more evidence of a bottom. Now let's look at gold, because these indicators are really striking when we look at gold. With gold, you can see that the time that gold showed itself as being extremely oversold and due for a rally was when we had this long period during the dot-com boom where gold was the most hated asset in the world. When that ended, then gold took off, and you can see the red line was above the blue line for almost the entire bull market. Didn't even touch it during the financial crisis, but then it crossed down right here, 2013, and it's below it. So is it turning up? Yes, I think it hasn't turned up yet on the monthly, but if we pull back to the weekly, we can see here that it is turning up. It's moving in upward fashion. The blue is moving down. So that's a very important signal. Nothing like we've seen before, except what we saw back at the beginning of the bull market for gold, all the way back in 1999. Now, this accumulation distribution index is absolutely fascinating. You can see that the accumulation distribution index is now at 35.7 million from a low of nearly 40 million, and this all has occurred just within this time frame. You can see the time frame here, just within this tiny time frame here of this fall. It went from a positive 20 million to a negative 40 million. Now we're a positive 35 million on that accumulation distribution. That is an amazing bounce on an index like that. What does that mean? Well, I think that it means that we finally turned the corner for accumulation of gold. And now, again, this is just paper markets, so that's not an indication of the physical, but we're going to look at the physical when we look at this gold rush, I'll call it, and we're going to go and revisit this Dutch gold story, because I researched it further after reading a Wealth Watchman article, and I think there's more to this story, and it's important that we discuss this. So let's start out with a news story here. Now, what I did was I went, and what I frequently do is I wanted to find out where the first word came in, because that's very important. Where did the news come from? Who released the news? when, why, how, who, where, etc. Now, I did a search on Google News, and I did a custom date search, and I put the 20th in, and I found nothing except for one interesting story I'm going to show you here. It was the 21st when all this hit. Now, if you look at the U.S. news sources, the U.S. news sources hint at the fact that the Dutch are repatriating their gold. But if we look at this story here from a Dutch news site, we find a little bit more information here. The Dutch central bank has secretly brought a large part of the national gold reserves being held in a secure depot in New York back to Amsterdam. In total, 120 tons of gold valued at 4 billion euro has been brought back to the Netherlands by ship. Noos Television said the high security reparations, I think they meant to say repatriation, maybe, for the move took months. Very interesting. So they brought it back by ship, and it's been going on for months, and they decided to announce it when it got back. And we'll see how that's an important point when we get to Wealth Watchman. But I wanted to show you this article here that was kind of interesting. This is one that popped up when I was looking for the earliest date of a news release. Now, I'm not someone who knows a lot about fashion, so I'm not someone to consult. But just going by common sense, I would say that on the 20th here, this is November 20th in the Daily Mail. This is the day before the Dutch announcement. We have Queen Maxima, and she's the Dutch royal, and she's glamorous in her plum and gold as she steps out in Utrecht. Pardon my pronunciation. Now, I didn't think much of that until I saw the picture. Now, you tell me. That is some kind of statement. That doesn't look like something that women normally wear. You can see she's got this massive gold, looks like leaflet thing around her neck. Interesting, because the other place that the Dutch have their gold stored is also in Canada. And so that's kind of interesting. So what does this mean? Why did she come out the day before wearing this massive gold ornament around her neck? You can see here in another picture of her in this video, she just looks kind of fashionable with the wrap and stuff like that. But here's this massive gold necklace that she has on. Very interesting. What are they hinting at? Well, I think they're hinting at the gold rush has started and they've got theirs. So let's look at this zero hedge story first before we go over to Wealth Watchman. This is the real reason why the Netherlands repatriated its gold. In what could definitely be called a stunning move, the Netherlands has announced it has repatriated in excess of 120 tons of gold from the vaults of the Federal Reserve in New York to the Dutch Central Bank in Amsterdam. Officially, a move made to rebalance the locations where the gold is being stored. One cannot ignore the fact that the Netherlands only repatriated a large part of the gold which was stored in New York, and it did not touch the gold stored in Canada and London. Additionally, it's not just some gold being brought back home. No, the total amount, 122 tons or 4 million ounces with a market value of $5 billion. This will reduce the exposure of the Dutch central bank to the U.S. financial system, as just now 31% of its gold is being stored in the vault of the Fed, coming down from 51%. We have the impression this won't be the last repatriation, as the Dutch central bank is keeping its shipping route secret in case more gold needs to be repatriated. This is supposedly a quote. Don't know where from. That's not sourced. So here's the story. The Dutch are bringing back their gold. Now, the question is, I'm wondering, is this going to start an avalanche of repatriation? And we're going to look at Wealth Watchman here because that's kind of what he's hinting at as to how important this story is. Today comes the surprise announcement that the Dutch National Bank has just finished repatriating 122 tons of gold from the New York Federal Reserve. This is unreal, and not for the reason many are thinking. Now, this is a fairly shocking thing because, as we know, that for several years now, Germany has been begging, pretty please, can we have a few scraps of our gold back, to the exact same group of Fed bankers, only to be told, you can't even see the gold. It isn't safe. Or, well, you can have some back, I guess, so long as you give us 7 full years to return 300 tons on deposit. Or, what do you mean those aren't the bars you deposited with us? Gold is gold, isn't it? Or, why the long face? You got a whole 5 tons back this year. Germany, the largest powerhouse economy in all the old world, has tried and tried for several years to get the bullion back, much to no avail. Yet it turns out that all this time others were moseying on up to the front of the line to get their gold first incognito, like the Netherlands. If you were a German citizen already livid that your government couldn't seem to get anything repatriated from the New York Fed but annoying excuses as to why you couldn't get a hold of your sovereign gold, how would you feel if you'd been hit with that surprise announcement today that the Dutch authorities had successfully shipped in tonnage in the same ballpark as yours virtually overnight? How would you feel hearing that others had massive gold shipments made easy peasy with no logistical problems to speak of? Would you continue to buy those poorly conceived excuses any longer from the New York Fed or from your own representatives? Let's take it a step further. What if you were a Swiss citizen being bombarded by bankster propaganda day in and day out for several weeks leading up to your historic referendum to repatriate your gold from the central banks of the world? Remember, all of the Swiss right now are the recipients of a propaganda bombardment campaign courtesy of the Western banking elites, who are terrified at the prospect of having to ask for 1,500 repothecated tons of gold. They know that the gold will have to be bought on the open market, and they know that it means for the gold and silver price suppression scheme. The Swiss are being told that repatriating the gold would likely result in turbulence for the Swiss franc. They're being told that bringing back the gold is uneconomical. They're being told that bringing back the gold is a step backwards into the archaic, disproven monetary and economic theories. They're being told that bringing back the gold would create enormous currency problems for greater Europe as a whole. So we'll go down to the conclusion here. Such an announcement about this gold repatriation couldn't possibly have been timed any better, Shield Brothers. Which honestly leads this watchman to wonder who greenlit this announcement in the first place. Such a state secret could have easily gone hidden for just 8 more days until the danger of the Gold-mageddon referendum had passed, the storm clouds had left, and the markets could have digested the news. Why then was it made? Why indeed? I suspect someone's head may roll for letting this cat out of the bag at such an inopportune time. While the Dutch repatriation is quite telling, surprising, and important, I maintain it is the mere announcement of it and the timing of that announcement is the biggest story here. Someone in powerful places could have greenlit a decision to courageously pull back the curtain on the bankster propaganda in Switzerland with one master stroke. This could be a game changer. Now, I agree. Again, why was the Queen wearing this? What are the Dutch up to? Now, let's look at another story here. This is also a story that broke on the 21st of November. And this is just one I happened to come across because I was looking for gold and Dutch and things like that. Gold exploration group Central Rand Gold has entered into a memorandum of understanding with Beijing Angkong Investments. I'm not going to read the rest of it here, but you can see in the caption here, Central Rand Gold is a Johannesburg-based gold exploration group. So we see that, and you can see down here at the chart, you've got this nearly dead stock price here. And you've got the Chinese now coming in, and this may be an indication that we're looking at some kind of endgame with physical gold, because now it looks like they're starting to buy up the gold miners at bargain basement prices, which is a brilliant move on their part. But let's look at the Chinese reserves here, because this is what's going to be important. This is a table from the World Bank, and this is total reserves. So for those of you who don't understand or haven't heard me explain it before, basically the way foreign exchange reserves work is this. Any country has a certain amount of exports and a certain amount of imports. If their imports exceed their exports, then they run a balance of trade deficit. If their exports exceed their imports, then they have a balance of trade surplus. Now, all of these countries, of course, have foreign exchange reserves, and you would think that some of them would have none because they're running deficits, but because the central banks print money, then they all have a certain amount of reserves. And you can see that by the fact that you can see the foreign exchange reserves in 2010, and we can go back to any of these periods here. But just going back to 2010, you can see China from 2.9 to 3.8, Japan from 1.0 to 1.3, Saudi Arabia from 459 to 737, Switzerland to from 270 to 536. And of note here, you should notice United States 488 to 448, and we've got Germany from 215 to 198, and Italy from 158 to 145, France from 165 to 145. Those are the sick countries in the world. Because almost all the rest of these, you can see, and you can go through the list yourself, they're going up, and that's because central banks are printing money. So obviously, if the vast majority of these are increasing, then it's not a one-for-one situation. It's not a zero-sum game. Obviously, all of the central banks of the world are printing money, and therefore everyone's foreign exchange reserves are going to go up. But some are going to go up more than others, and some, like the U.S., France, and Germany, and some of the real sick countries, they're actually going to go down. But you can see Switzerland has actually doubled its foreign exchange reserves from 2010. So here's the question. What are these foreign exchange reserves made of? Well, you can see that they say includes gold, current U.S. dollars. But this is total reserves. Total reserves comprise holdings of monetary gold, special drawing rights, reserves of IMF members held by the IMF, and holdings of foreign exchange under the control of monetary authorities. So it's basically gold and whatever these, this is nonsense, SDR and IMF reserves. It's gold and cash. That's what these reserves are. So you can see that China is by far the leader in foreign exchange reserves. They have more than 3 times the nearest country, which is Japan. And you can see down here in roughly 7th or 8th place is Hong Kong with 311 billion. You add that to China, and we're talking $4.2 trillion for China. And then, Taiwan and the rest of Asia. If we just look at Asia, then we're talking about $5.5 trillion in foreign exchange reserves, which pretty much is more than all the rest combined. So the question is, what are they holding these foreign exchange reserves in? Now, a lot of people contend that China has a lot of treasury bonds. I don't think we really know how many they have. A lot of dollar cash instruments. I don't think we really know how many they have. But I think that China has been trying to increase the percentage of gold as opposed to the percentage of foreign currencies. I don't think that Japan has. Japan would be very wise to do so. And I don't know if Saudi Arabia has. But we know that it's unlikely that the Federal Reserve has the amount of gold that they say they have. And if the countries that are supposedly having their gold held by the Federal Reserve in New York or wherever it is, if there starts to be a rush, a bank run, a gold rush on the Federal Reserve, the way it seems that the Netherlands has just kind of front-run Germany by getting their gold surreptitiously, then that could literally cause a gold rush for all of the countries of the world trying to get their gold back into their own sovereign territory. If that's the case, then we could be looking at an explosive rally in gold. As Wealth Watchman has pointed out, the Federal Reserve may have had to scramble to buy on the open market the amount of gold that they sent to the Netherlands. So that may be the explanation of why we're seeing this amazing accumulation distribution number, one that is only surpassed by the high in gold back in September. And we'll talk to you next time.